Good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Check out our blog pretty soon. Go to our events page, and you will see a link for a portfolio protection and management class using options. This, I would say, would be good for all levels, beginner and beginner, intermediate, or advanced traders that are just looking for different ways to buy protection, pay for protection in a portfolio, or look for ways to manage portfolio protection for like a basket of stocks or a couple of ETFs. Okay, that will be coming in. I have the date for you. I believe it is the 20th, but hold on. It is April 20th. Okay, Saturday, April 20th. So it's coming up in just a couple of weeks. All right? And with that, let's go to the markets today. So I think overnight Draghi says negative interest rates are not showing any material negative impact. I just find that a strange thing to say for a central banker. However, the market has come off some. I would say VIX has definitely, the bid has jumped a little bit in here. This week, we actually talked earlier in the week about several types of trades. Our strategy letter has no direct short vol in it. Normally, we would have something, but we've unwound pretty much everything at this point. And I think the market is looking for a direction. So normally when the central bankers said, oh, we're going to monetize, we have rallied pretty sharply. Today, it could happen again. It could happen again, and it could be a vol-crushing rally. It certainly could. We have started getting mixed signals, though, so I just think this is one of those days where let's see how the first hour goes. I don't know if that's necessarily going to give us anything for the rest of the day. It looks like there is a bid for gold. There's a bid for gold. There's a bid for treasuries. And what I would say is as long as that bid remains stiff, we'll wonder if there's still a bid for equities. Normally, that easing language from central bankers has driven stock prices up. As strange as it may seem. So our sell-off this morning could easily be a rally by the afternoon. And I just think there's confusing signals. Yellen is going to speak today. She'll probably talk more dovish talk, and you can end up seeing stocks up on the day. Overall, though, just I just find all of the central bank action that it's never kind of ending. Eventually is going to be troubling. I just don't know when that will be. For right now, though, stocks don't seem to care very much. What I would do, though, is we're going to look for positions in the chat room today that are starting to plan for bigger moves in volatility going forward, but let's see if we can price them out a little farther. I think short term, I just think we beat around a lot more. We don't really get anywhere, but it would not surprise me if we saw more weakness. So again, take a cue from a couple things. Okay, take a look at what paper is buying in the VIX. We'll in a chat room today. We're going to look at some volume this morning. See if there's anybody who's really interested in starting to spend some, again, real money. There's been record inflows, and I got a bunch of notes from people. There's record inflows into all the vol products. So retail paper, fund paper has been buying the all of like the UVXY, VXX, all of these products. They've been buying them up now so the record net long notional, I believe, is close to a record. And it would make sense because they're at the bottom of the range. They've ticked up a little bit from their lows, but for the most part, they're still at the bottom of the range, and there's a lot of longs out there now. For regular option pit subscribers and people that look at our blog and things like that, there's the decay component to these products. So the question is now and they're decaying, and the future premium again is fairly large. So unless we have the shock, right, maybe from a central bank issue, or looks like China's stabilizing their foreign currency reserves, are stabilizing since they stopped lowering and trying to manipulate their currency. The shock now really is looking somewhere toward the EU and the euro, and when you look at it, not much of movement here, right? You're seeing a little bit for vol in these products, but it just reminds me of being on the floor like many moons ago, and when you're an option trader, the floor was surrounded by stock desks, and all of a sudden everybody's seeing the news, and except the Euro GDP, which Mark was looking at yesterday, which we'll look at again today. And you're surrounded by stock desks, and everybody kind of looking at each other saying, this doesn't look good. So instead of everybody running to the stock, we'll kind of slowly go over to the stock desk and just start trying to sell as much stock as we can. It kind of feels like that right now. It doesn't feel as obvious. And again, the resiliency of the market into all the central bank talk has been pretty strong, because I think the algos bid things up. And again, one of these times is just not going to work. I don't know if this is the time. But you do have exceptional, like I said, you have exceptional long open interest in products like VXX. Okay? It's up a little bit today. Vol's up a little bit today. It's kind of in line with what's going on with stocks. But lately I've been more interested in the time decay and the vol products as a way to make money, and I think that might slowly be coming to an end here as we get to the bottom of the range. We were looking like things are kind of cool, and then the central bankers start talking again, and it makes things more volatile again. And I think that's where we find ourselves. So we will look for trades, ways to buy cheap upside in the vol products. We'll try to finance those ways in our chat room, similar to some of the things we're talking about in okay. And with that, I will let you all go. All right, we'll see what happens.